Good morning. Welcome to Osh Pit Live. Who needs an opening title sequence when you've got our new game? Where in the world is Leisha J. Leslie? I'm Mark Sebastian, your only option. This is Osh Pit Live. I'm joined by Leisha Leslie, globe setter, world traveler. Leisha, where are you joining us from today?
We are in Naples, Florida with all the rain.
Oh, nice. Well, Leisha, good morning. Happy Friday.
Good morning.
It's been an interesting week. We got a lot to discuss, but the Federal Reserve came out and they were kind of hawkish. But CPI and PPI have both been soft. That is a green shoot for those hoping for a rate cut. That has been what the market has been banking on. The market closed on Thursday at all-time highs, but this morning, as we're, pre-market futures are down about 0.5%, and that is, kind of interesting. What's your take on the price action this week so far?
Well, when we get that breakaway gap we had on Thursday, here in SPX, I'll show you my chart. As long as the stock, or in this case, the index, stays in that area of the breakaway, you need a couple days evidence. As long as it stays there, generally continues in the same direction. So the key today will be watching yesterday's lows.
Okay.
54, right there, 54, right? 5400, 5402.
Yeah,
we need to watch that 54 holds. And if not, we may try to close that gap.
And that was quite the gap. You know what's interesting? I had this thought today, Leisha.
Yeah.
The market has been banking on interest rate cuts for a while, right? They're praying, they're hoping.
Foolishly.
What if what they get is not what they want? So hear me out here. I'm in stocks, and we're at all-time highs. And then I see how much money I'm getting for a 5-year bond or some sort of interest rate product. And I see that interest rates are starting to fall. What if I sell my stock positions and jump into some of these
to lock it in
interest-bearing accounts to try and lock in that rate, and actually some cash leaves the market near term on a rate cut? It was just something I was pondering as I was laying in bed this morning, thinking about.
Yeah.
Do you think I've got something there, or am I just imagining my little pie in the sky?
I would think that some people had already, once the rates had gotten higher, I think that they already did some of that.
Mm-hmm.
Don't you think?
You would think, but the market just keeps going up.
Yeah. Yeah, I don't know. Will they, like you say, last minute try to catch that before it changes? I don't know. We may not get a cut. I mean, the market has handled not cutting for the whole half year so far, right? I mean, think about January. They thought there were going to be 4 cuts.
Yeah.
And the market has handled it
very
well.
Thought the market would have tanked by now, and it continues to just go up and up and up, despite interest rates being stubbornly high and the Fed not cutting. Now, you could argue that the market as a whole maybe isn't going up nearly as much as headline S&P and the NASDAQ 100 are, and that is a very tight rally, which is why I kind of say this market is really not a market. It's a 3-headed monster, right? It's Apple, it's NVIDIA, and it's Microsoft right now. And
well, it's Apple the last 2 days.
Apple and NVIDIA. Yeah, I mean, Apple's just been talk about parabolic. You've been bullish that one. You've been bullish that one. You said, it looks like it might be ready to break out.
Yeah. I called 200 though. I didn't call 215.
Well, you got 200 right. I'll give you that.
Yeah.
And so, what do I mean by that? Well, you look at where we closed yesterday on something like the Dow Jones, right? 38,647. It was over 40,000 multiple times in kind of mid-May, but it has not sniffed 40,000. It's trading below just about every major moving average. It's the Dow Jones is below the 50, it is below the 100, and it's below the 21-day moving average right now, despite the what appears to be strength. And if the Dow is really kind of the economy, and people say, Mark, why are you using the Dow? The Dow's only 30 stocks and it's price weighted. Believe it or not, based on the weightings, you could argue it's actually a more diverse index than the S&P 500.
Yeah.
If you're a stock, the S&P 500 is really driven by the top few names. The Dow is driven by United Healthcare and Goldman Sachs, and is not just tech heavy. If you want to look at an alternative, something closer to the S&P 500, you could look at S&P equal weight, which again has not sniffed a high since in about a month.
RSP, correct?
Yeah.
Yeah, that looks to be just consolidating.
Exactly. But meanwhile, the S&P continues to go higher, and it's on the backs of really three, you could argue, maybe five names, but I the three-headed monster sounds better than the five-headed monster. Nobody wants a five-headed monster. That's just too much.
Too many heads.
I think Ghidra had four heads. We can do a four-headed monster, right?
That's right.
All right. So we can slap Google. You can put whoever you want in there. Google, Amazon. Who's your fourth head to our three-headed monster, right? We've got Apple, Microsoft, and Nvidia. If you had to add a fourth head to complete our Ghidra, which is for those unfamiliar with Ghidra, that is Godzilla's arch nemesis.
I remember those Godzilla movies.
Yeah.
I would say Google.
Mm-hmm. I would probably say Google as well. That one's been pretty strong.
Look at it's very strong.
Mm-hmm.
Could be topping out here though.
Yeah. What do you guys think? Who's my fourth head? All right. Now the other big piece of news before we dig into your charts is in GameStop. Roaring Kitty, he's back. He's up to 9 million shares, but he's out of his option contracts.
Oh, he did sell them.
Sold out of every single option contract, but added to his physical position.
Did he let his fans know that? His followers?
Yeah, he posted a picture of his position on Twitter.
Oh, okay.
Or X, excuse me.
They were expiring today anyway, weren't they? Or are they next week?
They were expiring next week. They were the 20 calls.
Yeah.
And he's out of them. But there's still a lot of open interest there.
111,000.
Yeah, it's a pretty nice day. And it's funny, people are like, oh, look, he's long 9 million shares. Well, when you look at how many options he had, I think he had 120,000 calls and 6 million shares. Adding 3 million shares is actually significantly deleveraging his position. Right?
Yeah.
And it's de-risking, right? It is far less risky to hold stock than call options that expire in 8 days, that are deeply in the money, that on a short squeeze name. And so people are like, oh, look, he added I'm bullish. I actually think it was a little bit of a risk, I mean, clearly
taking
still
some off the table.
But I think it is actually a little bit of putting some money in his pocket.
Yeah.
So don't always believe the headline. But believe it or not, some reporters don't fully understand financial markets.
Really?
Yeah.
Like I was saying yesterday, I thought watching the Powell testimony, first of all, I was surprised how young those reporters were. Second of all, the they're all just like, come on, you got to give us a cut. I felt like they were all just saying that. Give us a cut. When can we get a cut? You know, like they were, like they, I don't know, just.
Well, you know, when the market goes up, ad spending increases, and that's what pays their bills.
Right.
Most reporters are a bit of cheerleaders for stocks in a lot of ways.
Yeah, I guess I could see that.
Speaking of stocks, we've looked at SPX, we've looked at the Dow. You were noticing some interesting movement in the dollar and the bonds.
Yes.
That I wanted you to cover, because that, you know, bonds and the dollar are so much bigger than the overall stock market. It's interesting. What are you seeing in those two markets?
Well, the bond, here's the 10-year looking really strong. Excuse me. The 10-year looking very strong, up against resistance here. Now we may doji out here at this resistance level on the 10-year. TLT, same idea, traded right up to resistance, but popped over and is trading above it. We may get a little rally in TLT here to 95, and then possibly this other high, 96.40. So bonds are looking bullish.
In theory, that would be bullish the market.
In theory, yes.
Although a lot of people don't know that historically, when the Fed cut rates, that creates negative market returns.
Historically.
But this market is not following any type of norms. So
right. Well, we have AI now.
Don't bank on 100 years of history. Just bank on what's happened in the last 100 days, folks.
We have AI now. So yeah, look at TLT here. If it can break out above here, yesterday's close, it looks like it has room to go higher.
Mm-hmm. What are you seeing in the dollar?
Well, now yesterday, so the oil in dollars has expired. That
Yes.
Since 1972, I believe it was. That expired on Sunday, and now they're going to maybe not all of their transactions in other dollars, but now they're open to more transactions not in dollars.
Yes.
Which, I don't know. Look at, I'm surprised by this. I thought the dollar would go down by that. It's looking strong.
Yeah. So strong dollar, strong bonds, strong market. Basically, no matter where you put your money, you can't lose. Right? Isn't that what we've decided?
Everyone's making money.
Everyone's making money.
This is America.
It's America.
On an election year. Sorry, I stole your line.
No, I love it. No, it's true. I mean, I stole that from somebody else. So, you know. Any other big charts that you're watching?
Well, NVIDIA had a nice breakaway gap with a hanging man, kind of doji there.
Mm-hmm.
I thought maybe it could roll over, but now it's trading higher. I was looking for an opening lower and trading lower, but it's not happening. As of yet.
Up 50 cents pre-market.
Yeah. Possibly. It could possibly happen. I would watch for that. I would watch for NVIDIA to trade lower today and then possibly hop into some puts.
What do you make of the chart of Apple here?
You know, it's hard to read because it's so parabolic. It was not able to close outside my pitchfork, as you can see. You got to watch this. We need a little more evidence here. If this is going to bull flag or possibly roll over. It's at resistance here. Like I said, he hasn't been able to close above there. So 218, say, watch that level. If it closes above 218, it's going higher. If it can't break that, it could possibly wallow or pull back.
Would you call that candle from yesterday a doji or no?
Possibly. I like a doji to break away from the previous high or low. I want to see a doji appear.
Ugh.
You know, not inside, not an inside day.
The wick.
Yeah.
All right. Speaking of wick, let's bring on the manager of Wick, otherwise known as Weekly Profit Cycles, one Andrew T. Giovinazzi, the Viking of volatility, to talk some markets. Good morning, Andrew.
Hi, Andrew.
Good morning. Hey guys, how are you?
All right. Now, so we always wonder where Alicia's going to be. We never wonder where you're going to be.
There is huge truth
On
to
his
that.
rock.
There
He's on his
is
rock.
huge truth to that.
All right. Good morning. So Andrew, I got a lot of kind of things I'm looking at. Wanted to start with kind of what's your take on where the market is. We've got this kind of dispersion that's developed. I'm sure you've seen this before. I'm sure Alicia has. I have, but we've got this market where first off, who's your fourth head for our Ghidra, and then what do you make of the fact that really the overall market is not rallying, but because the top end of the stock market has gotten so big, the market indicators actually do continue to rally.
Right.
It's a dispersion.
I would put the fourth as Google at this point, just because of the
Bard.
Yeah, and just they're definitely, they're an AI, not a good one, but from a stock performance wise, I think they've expanded. Amazon's kind of topped out a little bit for, it's still trying to get back to like those highs of 2020 maybe or something like that. But I think Google has made new ground. So
right.
I would go, if you would think Amazon is less AI and Google is more. So I would go Google on that.
All right. So who's your fourth head to the Ghidra? And then if you had a Ghidra made of terrible stocks, what would that four be?
Oh my gosh.
Yeah.
Walgreens.
Yes, Walgreens, CVS,
any drugstore, CVS. I'm actually, I don't want to give away my trading vehicle, but like any one of those junk retailers, Odd Lots, Big Lots, or whatever that one is that's getting kind of thrashed. I think that's definitely the drugstore sector not having some issues right now.
What's the ticker for Big Lots, Andrew?
I think it's BIG, I believe.
Is it big? Oh yeah.
Oh yeah, I see it.
Yeah, and it's the opposite of big. They should just rename it small.
Yeah, or pennies, zero.
That was an $80 stock in 2020 when everybody was buying crap for their house. Like, we're stuck in the house, we're gonna order some piece of junky whatever for whatever, and now it's just zero.
I got another one for you, Andrew. Cleveland Cliffs, CLF.
That's weird.
Hot how steel can be just more and more expensive, and this stock just dies.
What is going on there?
Garbage.
Sure is. Wow.
Just, I could even give you a whole sector. The oil sector is having a little bit of trouble.
Sure is.
I think is probably the buying up another, you buy commodities when they're cheap, not when they're expensive. And right now it's
what list of awful stocks would it be if it didn't have Intel in it?
I feel like they're the Sears of, like, the internet comes, catalog sales, Amazon just basically takes Sears's whole business, puts it on the internet, and makes trillions of dollars, right?
Right.
Sears literally has the business, everything already done. They had the inventory, they had the warehouses. The internet part was actually the easiest and cheapest part at that point. They're like, oh, nope, we're not going to do that anymore.
Amazing.
We're out of this whole selling online business. Terrible idea.
Sears
and Intel has done the same thing. Yeah. Okay, we're going to create high-speed computing chips.
Well, I think Target is making the same mistake that Sears made 25 years ago. Walmart has smartly pivoted and figured out we need to be a player in the space like Amazon is doing, where it's not just I'm buying stuff on the internet. I'm getting streaming content. I'm getting perks. I'm getting things like that. Walmart Plus is a good experience. Target, not so much. And I know we're going off on a tangent here, but yeah, folks, what are your, what's your fourth head? And then what is your terrible Ghidra? of bad stocks. Want to hear them, folks.
The ugliest monster.
I mean, you would think too, Walmart has outperformed because I've gotten rid of almost all my Amazon. I have almost any Amazon left, but I started shifting into Walmart. I don't know. Oh, when Amazon was going after the grocery business with the Whole Foods.
Oh yeah.
And so when I'm like, this is total crap. And that's when I started getting interested in Walmart. And since then, I think the stock's up like twofold or threefold or something. It's been a pretty good run. So anyway, but
all right. So we went off on tangent, but I wanted to ask your take on kind of what Leash and I were talking about at the top of the show. You know, the S&P's at an all-time high, but Dow Jones isn't. Most of the market really isn't. Now, it's been that way to some degree for, you know, a extended period of time,
right.
But this feels like it's getting really, really stretched in terms of the market either needs to catch up or these guys need to come back. What's your take?
Well, I mean, that's what I just looked. I had to look. Nvidia's up tenfold since October 2022. Like 13, 14 bucks to 130 bucks.
Yeah.
You know, all the splits. Okay, it could keep going, but I mean, at this point, they got a double revenue every year, triple revenue every year or something. I mean, it definitely could happen, but the more years it takes, the more people catch up. So, but at this point, you know, if people aren't buying oil stocks at some of these levels and what I would call like more Main Street stocks, they're still like, you know, they're comfortable with the growth of AI. They're not comfortable with just like the growing a generic business right now. And I think another thing you guys said is like every asset's moving. Usually that means there's too much money. I mean, again, I've said that it doesn't matter, but the government's spending too much money and it's creating this problem. And Powell does not address it ever. I guess he wants a new job, but eventually the government has to stop borrowing money and spending it on who knows what. I mean, does anybody get it? I'm still looking for it.
What's going to be the catalyst to stop them or like wake them up? What is it going to take?
I think, you know, everybody says, you know, nobody will buy bonds, but that's why Powell's staying ahead of it by keeping the rates where they are.
Yeah. We're at so the market's at an all-time high. Johnson & Johnson is at a 2-year low.
Yeah. Again, look at, let's say 3M, right? And they just split their stock off, Mark. It's a couple other ones.
Yeah.
You know,
that's got a little bit better performance than J&J, but not much. J&J.
Yeah.
You'd think you would get more out of those stocks, right? And they're just not happening. So money eventually, I'm not going to say this happened in the 90s and the 2000s, but it's exactly what happened. All the money went to Microsoft, Cisco. Do you remember EMC?
Yeah.
Right. All that kind of stuff. And then all of a sudden, right. And then nobody liked Berkshire Hathaway. Okay.
Yeah.
It's like the playbook is literally the same. It's not that Nvidia is not a great company or that EMC wasn't a great company. It's just, you know, the market is basically, it's fashion, right? And the fashion right now is what they perceive to be AI. And like, do I want to spend any money shorting Nvidia? No, like, no. I've seen this movie before. I've seen how high stocks can go. Nvidia could double from here.
Yeah.
There's nothing to stop it at this point. I mean, the stock's up 30% in right since before earnings. So,
yeah.
But anyway, eventually the AI stuff will start helping other stocks. But the only thing is the government will stop spending when they're forced to stop spending. And it just hasn't happened yet.
All right. Here's our you know, I asked you about the Ghidra. So, all right, I'm taking Nvidia out of our three-headed monster. We're just going to go to a two-headed monster right now. Apple and Microsoft. So, Andrew, we've got a newborn baby, little baby Andrew Giovinazzi the fourth. All right, just born. And yes, I know you're not the third. So, and the little baby has $50,000 when he's born. He's born with $50,000 in his little right hand. It's the cutest little 50 grand wad that you've ever seen.
Little hand, big wad of cash.
Yeah,
right?
it's like
little hand, big wad.
And the baby looks at you. He can't say anything, but he can say one stock symbol, all right, that he wants you to buy. Folks, this is a fun little experiment. So the little baby has 50 grand, and it can tell you one stock symbol to buy, and it can tell you to buy, and the baby can't trade it or sell it for 20 years. All right, Apple or Microsoft?
I'm going to say Microsoft.
All right. Leisha, what do you think?
After Apple just shooting up like that, but 20 years, probably Microsoft also. Tesla.
All right. We're in agreement.
It's not an easy choice.
It's not an easy choice. I think Apple is at a lot more risk of seeing its market erode than, especially if like a brain chip replaces the phone or something like that, or who knows.
I tell you what, how easy would it be for a lot of Apple users to ditch Apple if Tesla came out with a $200 smartphone?
Right.
And Apple is basically Apple doesn't run their own search. Google does. Apple doesn't do its own AI. OpenAI is doing that, and that's mostly owned by Microsoft.
Right.
And so you've got to ask yourself, again, Apple's adding AI. Apple doesn't innovate itself anymore. All right, it uses others' innovation and integrates it into its phones. You could argue that's an innovation, is the ability to recognize innovation and integrate it. But Microsoft is an innovator right now. It appears to be, and it has been. Apple is not. And so my selection, we are unanimous. It is Microsoft. Little baby's buying Microsoft, which means 100%. 100%
we're wrong.
that we're wrong, and you should go buy Apple. All right. Leisha, I wanted to update a couple of. I was looking at J&J and 3M last week. 3M's done a little better than J&J. I straight up went long J&J yesterday. I think it's time to put a leg out there. It's at multi-year lows. It's a good company. I bought some calls.
I like it. It's sitting at support. I like it.
Yeah.
Tell you what, though, big dividend too, Mark. I mean, they have the ability to keep raising dividends. $6 a year, $5 a year now.
Yeah, they pay huge. But the other name, and I know Andrew talked about this one last week. I'm going to talk about it, or maybe 2 weeks ago. I'm going to talk about this week. I think Robinhood continues to look really strong, and take it kind of a little retest there on your chart. I think if the market's going to go higher, Robinhood is going to be one of the areas, one of the leaders in that business.
Well, they made a huge switch to actively trying to gather assets.
Yeah.
And somehow Robinhood has found a way to make money out of, their rebate program. Well, yeah. I mean, that's essentially, I think that's the biggest risk for Robinhood. While I own some shares and stuff, it definitely, and none of us here really are fans of that. But ultimately, you look at payment for order flow, the markets are relatively tight. You usually fill in between the markets, and it allows you to trade relatively low commission. But we know it just feels dirty.
Yes, it does. It does. It is dirty.
Leisha, you talked about NVIDIA last week, and you're looking at this one kind of out of nowhere, but I'm interested to see what you have to say about it.
CLSK, Clean Spark.
Yeah.
I like it. It's traded down to the bottom of the pitchfork, And I'm thinking it's going here 19 3/4 and possibly back up here at these highs, 21. I'm looking to buy calls in there today.
Clean Spark, CLSK, they are a Bitcoin mining company that independently owns and operates 8 data centers in Georgia to mine Bitcoin, huh?
Yeah, look here, the consolidation. The last 2 days it broke out above the 50 and 21-day convergence. That was a lot of resistance there that it's fought for a while. I think it's breaking out. It's got a nice thin zone above it. I like it. I was looking at the 1821
Call spread.
vertical. Call, yep. He has
I
a nice
like it.
skew. I think it was the 20. I wrote it up. It'll be out this morning.
That'll be on your option shopper on your Profits and Pumps blog.
Yes, it'll
All
be out
right.
this morning on Profits and Pumps, and I believe I'm going to do it in Option Shopper today.
There you go, folks. So if you want some actionable ideas, make sure you subscribe to Alicia's newsletter, Profits and Pumps.
It's really good.
Yes. Now,
Thank you.
Andrew, last week the world mourned on a Friday at 9 a.m. because they were waiting for their ride, and the Uber just kept canceling and canceling and canceling, and the vehicle never showed up. But fear not, folks. It is back. Your ride to better understanding of markets, your one-way trip to profits. Andrew's trading vehicle is back. Andrew, take it away. Alicia and I are going to go get some coffee.
Welcome everybody to Andrew's Trading Vehicle. You know what? It's the intro. I hope the show is as good as the intro is. So today, if you guys could put the chart up, because we were just talking about this actually, drugstores, health maintenance plans and stuff like that getting kind of shellacked in the market. And we're looking at CVS. Now, what's going on here is what I look for when I'm trying to buy options is just a catalyst, right? So I'm not looking at CVS as wow, I think the stock is going to go back to 100. It could eventually, but this isn't really the idea for this sort of vehicle. Is mostly what kind of catalyst for a move. Like people like to trade earnings, which is a lot tougher, because they think, okay, you're going to get that big pop and your options are going to make a lot of money really fast and you close them, everything's good. There's a lot of risk to all of that. Volatility collapses, the stock doesn't move enough, whatever. But right now with CVS, I would say it's a stock that's kind of in flux. It used to be just sort of a boring, okay, it's a drugstore thing. Now Medicaid is changing their potentially rewriting and reimbursement policy, something like that. It's changed. It could put some more upside in. Therefore, there's now some story. So do I think if I write some 55 puts or 57 puts or something, maybe take delivery and kind of have that as a trade? Yeah, you could do that in CVS because, where's it going? I don't think the drugstores, it feels like they kind of bottom, but I think more important is if you look at the chart here in front of you, I kind of drew a line there. That's where the realized volatility is over the last 20 days. So there's still a lot of what I would call kind of the stock sort of moving around a lot more than it normally has. So, and there's usually a reason for that. It's just the news, like whatever, there's catalyst potential. I would say most of the time, if you notice that chart of that 20-day vol, that's a 20-day vol chart. Most of the time, 20-day volatility is like 15, 20%. It's not really doing much. Right now, it's almost double normal, or it's at the very top of its range, besides that one spike we had on the drop when they had that bad news over Medicare reimbursements. Now, something might change a little bit, which means there's potential catalyst for it to go back up. Simple as that. So for a trading vehicle, I would rather buy a couple of calls than sell puts in this because I think there would be more potential gain. Now, could the stock just go right back to 53 bucks again? Yes. So puts are actually relatively cheap. I think the options are relatively cheap. The volatility is only around 20%. So if you're looking at that line, you're looking at a 21% volatility, you're only paying much less for options relative to how it's been moving lately. And I think Leisha just closed a CVS trade kind of based on this idea over the last day or two, where the options are relatively cheap. There's catalyst, and then your small calls become big calls, which is ultimately when you want to buy something for a pop. It's hard to buy a $100 call and watch it double, or a $10 call and watch it double. You need a huge move in the underlying, again, relative prices, of course. But when you're looking at calls that are like $1.20, for a 1 month hold, it's pretty easy for a call like that to double in a $61 stock. So I'd say the trading vehicle today, there's some game back in the stock. It seems like its bottom wants to kind of go back up again. Reimbursement story gets better. You get 62, 4, 5 relatively fast. Again, because it's already moving and has some momentum, you could see that. And then you'd have an easy double on the calls. So I'm looking at buying a couple calls in here today. And that is my trading vehicle. When you got some movement, you would rather buy some options than sell some puts.
I like it.
Sounds like a good plan.
All right. Now I wanted to discuss something interesting to us, but boring to most people, and that is stock collars. All right. Does everyone know what a collar is? Folks in chat, do you guys are aware of what a collar is? So when people tell me, one of my favorite things to do is to ask people, why is Mark Cuban a billionaire? And people say, well, he sold broadcast.com to Yahoo. I say, no, that's how he became a billionaire. He is a billionaire because when Yahoo bought him, he collared all of his stock. So when you collar, that means you buy a downside put that protects your downside, and you sell an upside call that basically limits your gains. And the reason why people do this is because they have levels that they want to get out of their positions, or they want to protect themselves, and they're willing to give up some upside. Well, folks, interest rates are a part of the formula that prices options, right? Interest rates are at multi-year highs.
Ooh, I like where you're going.
Yeah. So interest rates, when interest rates go up, that positively affects calls and negatively affects puts. So puts become less expensive and calls become more expensive. Well, I was looking at the S&P 500 with where rates are. And right now you can do an even collar. All right. So that means you're the same distance in the put as you are in the call. And because of interest rates and a relatively flat upside curve, we're not going to dig into the curve, but we got a relatively flat upside curve. Because of interest rates, calls that are the same distance away from the underlying in the S&P 500 actually cost more than the put. This is something that was not the case 4 years ago when interest rates were at 3%, or when your mortgage was 3%, the put was significantly more expensive than the call. Now that interest rates, 10 years up at 4.5%, calls are more expensive than puts. So if you're looking at this market and saying, I'm scared, what do I do? There's never been a better, well, there has been, but in the last 15 years, there's not been a better way to hedge than to run a collar strategy over your market portfolio. Yes, you may get out of some stock at a price that's above where we are, but maybe not where they eventually end up, but you'll sleep great at night. So the one I was looking at yesterday when we were trading right around here was the July 5300, 5525. That one collected $6. Now I'm going to take it one step further. And you're saying, well, Mark, I'm really worried about the market falling. What do I do? I'm really worried. Well, if I'm collecting $6 on a collar, and let's say I've got a $500,000 portfolio, well, I can take those $6. Let's say I need, for every 5 collars I do, I can buy one extra S&P put and put that on and still not have money leaving my pocket. so I can be unlevered on the upside and levered on the downside and pay nothing. That is Mark's little hedging ditty of the week. Just something for you guys to mark to. Yeah, well, maybe I shouldn't use the word ditty after what happened with Diddy. But that was just kind of my market thought of the week, is that hedging looks really, really, really advantageous right now. All right, so we're up against it. It is 9:13 Eastern, 8:13 Central, 7:13 Mountain, and 6:13 in the morning in beautiful San Francisco. Right now, the market's down about 0.5% in the S&Ps. The NASDAQ futures down about 0.25%. We going to get another, they're just going to buy this on the open and reverse it? Or is today the day we actually take a breather? What do you think?
I don't know. I think this political turmoil thing in Europe might be something. I'm looking at IB and I'm seeing V stocks is trading 20. Well, we're trading 12. Is that tick right?
That seems very high relative to the VIX.
That's what I thought.
Yeah.
So, I think there might be a little political upheaval. Does it become a market upheaval? I don't know. I mean, it's ticking. I'm seeing 2040 for V stocks. So
that's crazy.
It sure does.
An 8-point spread between VIX and V stocks is incredibly wide.
Yeah.
Leisha, what do you got?
I'm thinking as long as we hold, 5,400, we're going to consolidate here, and maybe the chart is bullish until we close that gap. But even if we close the gap, we can still continue higher. So maybe a little pullback, maybe an inside day. But the chart is still bullish.
This is America. To quote Leisha J. Leslie, this is America. Stocks go up. I think they're going to buy the open and we'll end the day. It'll be an inside day, but we're going to end green. That's my bet. If I'm wrong, I'm really wrong though. Like
we were going to end where, did you say?
What we end the day up green, inside day up.
Green.
I mean, I think let's see. It's S&P closed 54.33.74 yesterday. If we do turn it around, we'll at least touch 54.50 today. If I'm wrong, I think I'm going to be really wrong though. Like really wrong. Like down 80.
Oh.
All right. If I'm wrong. But I'm probably not wrong. Just anyway. That's my take. All right, folks.
Closing the gap takes us down 60, so.
Yeah. Well, folks, it is that time. We had ourselves a great show. We covered a lot of fun stuff. GameStop. We looked at the market. We talked dispersion. We told you what our little baby was going to buy. And Andrew gave us a nice ride on his trading vehicle. And then I told you how great it was, how inexpensive it is to hedge right now. So for one, Andrew T. Giovinazzi, the Viking of Volatility, and Leisha J. Leslie, Queen of the Candles. I am Mark Sebastian, your only option. This was Option Pit Live. Have a great Friday.
Have a good weekend, everybody. Bye, guys.
Yeah.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member FINRA SIPC.